Hey everyone, welcome back to Corporate Decoder. Today, New Mountain Private Credit Fund just filed an 8K, and I am seeing a clear picture of their recent fundraising and distribution activity. Quick note, this is not financial advice, just my take on public filings for educational purposes. What is interesting is how they're actively selling shares while also paying out distributions, showing a dynamic business. Alright, let's dive into what New Mountain Private Credit Fund is reporting. This filing, a Form 8K, is essentially a report for significant events happening with the company. Think of it as a way for them to quickly tell everyone what is going on when something important changes. The company itself is called New Mountain Private Credit Fund. They focus on private credit, which means they lend money to businesses that aren't publicly traded on a stock exchange. This is a bit different from your usual stock market investments. One of the main things they're reporting is about selling shares that didn't go through the normal complicated process of being registered with the government. They call this an unregistered sale of equity securities. Basically, they've been selling their own company stock directly to investors. Looking at the period right up to May 1st of 2026, they sold quite a few shares. They sold 11,364 shares of what they call common shares of beneficial interest. That might sound a little technical, but think of it as just their regular stock. For these shares, they raked in about $0.3 million. That is $300,000. The price per S-share was $23.32. Now, they mentioned the final number of shares would be determined on May 26, 2026. This tells us they are actively managing their share sales, and the exact numbers can shift slightly. The important part here is that they are selling shares to raise money. And this sale was done privately, meaning it wasn't offered to the general public on a stock exchange. They are using a specific legal exemption for this called Section 4, and Rule 506 of Regulation D, which are common ways for companies to sell securities to a select group of investors without a full public registration. Next up, they're talking about what is called Regulation FD disclosure. This is a rule that aims to ensure all investors have access to the same important company information at the same time. They're using this section to announce their May 2026 distribution. So on May 26, 2026, the people in charge, the Board of Trustees, decided to give a regular payment to their shareholders. This payment is $0.19 per S-share. That means for every share you own, you get 19 cents. This payment goes to anyone who owns shares by the end of the day on May 29th, 2026. And it is scheduled to be paid out on or around the 30th of June. 2026. Now, here is a key detail for investors. This payment isn't necessarily going straight into your bank account as cash. If you are part of their distribution reinvestment plan, which is a program where your dividends are automatically used to buy more shares, then this money will be used to buy more of their stock for you. This is a common practice for investment funds to encourage long-term holding and growth. This section is for other important things that don't fit neatly into the previous categories. Here, they're reporting on their net asset value, or NAV, and the status of their offering. Net asset value, or NAV, is a really important number for funds like this. It is essentially the total value of all the assets the fund owns, minus its liabilities, divided by the number of shares outstanding. It is a way to figure out what each share of the fund is actually worth on paper. As of the 30th of April 2026, their NAV per S-share was $23.32. This is the same price they were selling shares for in their private offering we talked about earlier. This consistency suggests that the share price they are selling at is directly tied to the underlying value of the fund's assets as of that date. The total worth of the fund, its aggregate NAV, was about $962.5 million. That is a huge chunk of money. Their investment portfolio, which is what they own, was valued at roughly $1,860.2 million. That is nearly $1.9 billion in investments. But they also have debt. They owe about $975.4 million. So you can see they are using borrowed money to invest, which is called leverage. This can amplify returns when things go well, but also magnify losses when they don't. Their NAV of $962.5 million and debt of $975.4 million means their total assets, investments plus other assets are slightly more than their debt, but it is a close call. This debt to equity ratio of 1.06 times means that for every dollar of equity they have $1.06 in debt. This is a moderate level of leverage. It is not extremely high, but it is definitely present. They also have a lot of committed debt capacity, which means they can borrow even more money if they need to, up to about $510 million or $1.5 billion. It is interesting that all of their current borrowing is floating rate. This means the interest they pay on this debt can change over time, usually based on a benchmark rate. This makes them sensitive to interest rate increases. Most of this debt, 77%, is secured, meaning it is backed by specific assets. The remaining 23% is unsecured. There is a small note here that clarifies some of their debt, even if it was originally fixed rate, is being treated as floating rate. This is because they've used financial tools called interest rate swaps to effectively change their payments from a fixed amount to a floating amount. This is a strategy to manage their interest rate risk, likely to benefit from falling rates or hedge against rising ones. Now, let's look at the status of offering. This section summarizes how their private offering is going. They are continuously selling shares month by month. They provide a table to show what has been sold. This table is crucial because it shows not just the shares sold, but how much money they've brought in. This is a bit of an update from the earlier mention of 11,364 shares for $0.3 million. This table gives a more concrete number for a specific period. Here, it shows 11,364 shares were issued for a total of $265,000. This is slightly different from the $0.3 million figure mentioned earlier, but it is likely that this table reflects a specific completed period, perhaps a clearer snapshot of the total consideration received for those shares. The earlier figure might have been an approximation or included additional shares. The key takeaway is they are actively selling shares and raising capital. They intend to keep selling shares monthly, which is their strategy for growth and funding their investments. Finally, we have the signature section. This is where the company officially signs off on the report, confirming that the information is accurate to the best of their knowledge. Eric Kane, who is the corporate secretary, signed on behalf of New Mountain Private Credit Fund. The date of the signing is May 26, 2026, which matches the date of the filing. Now, looking at these results more broadly, New Mountain Private Credit Fund is clearly an active player in the private credit market. They are successfully raising capital through their private offering, as evidenced by the shares sold in May and the figures in the offering table. At the same time, they are distributing returns to their shareholders, showing a cycle of investment and payout. The NAV per S-share staying consistent with the offering price is a good sign of stability. However, their significant debt load, while managed with a moderate leverage ratio, is a key factor to watch. With 100% floating rate debt, they are exposed to interest rate fluctuations. A sharp rise in rates could increase their interest expenses, potentially impacting profitability and distributions. The risk I am watching is how they manage their floating rate debt in a potentially rising interest rate environment. What I'm actually looking for is to see if they can maintain their NAV and distributions while continuing to grow their investment portfolio, especially given their current debt structure. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps. And subscribe for more deep dives. Don't forget to check out the Discord in the description.